Welcome to London Academy of Trading's weekly market insight. This week we saw US Fed hold rates at 0.25. Not only that, but Fed Chair Powell said they would look to change monetary policy or their stance should inflation spike, not only spike, but be sustained. As it stands, probably not going to happen for at least a couple of years, maybe early 2023. Generally, we're not going to see central banks move interest rates at the moment or change their stance until we identify the full extent of the caused by the pandemic. Of course, it was widely expected that this was going to be the case, and so what we can see here is euro dollar. It being priced into the chart with a weak dollar since the start of essentially this month. There was an opportunity to enter down the bottom here. Technical inverse head and shoulders being bullish reversal pattern entry through the breakup. We have also created on the way up symmetrical triangle, again a continuation pattern of a previous trend and therefore potential opportunity there. Now, if you had looked to target purely the MPO, the minimum price objective of the price pattern, you'd have been looking around about sorts of resistance levels up the top here. You can see that there we did break those did fail at those resistance levels and then break them impulsively, then a further retest around this region. Euro dollar has consistently continued on this trajectory. We are now testing that trend line, but should it hold firm, the opportunity to take euro dollar to 122 levels, certainly on the inline, technically, fundamental. Plenty more. Real. The effect on the US stock market is somewhat different. We've seen more of a consolidation. Obviously, a rally here, you see again from the end of March all the way through April, but we've seen a consolidation, and during that consolidation here, the Dow Jones have formed symmetry. Of course, however, it has transpired that many occasions as reversal. I think if you want to get confirmation of the reversal, you want to see this level of support down here and take, but in line with the weak dollar, potentially strong US stock market effects, and therefore the technical information then in line with London. Final thing I'd like to look at would be Australian dollar, Aussie dollar, and hitting a very good level of resistance. Just above that, I would say, is a secondary level somewhere around about here. If you're considering going long and buying through that resistance, probably wait for the second one just for extra confirmation. That being said, it is expected as a market does approach or hit a level of resistance, it's probably going to bounce a possible break. That's a general consensus. However, in this instance, you see the sell-in off this resistance level has become less and less. Furthermore, but it does suggest that the possible break is ever more becoming a probable break. So be aware of that. Keep your eye on Aussie dollar long. Again, that's in line with the fundamental of potentially weak dollar, the Fed's dovish tones, but also potentially a strong Australian dollar as global markets recover, as China recovers. We had some good data out of China earlier today. There will be an increased demand for industry, increased demand for raw materials such as iron ore, copper, so on and so forth. Nickel, these all come majority which come from Australia. Therefore, the dollar should be more buoyant on the back of that. Next week, a few things to look out for. Next week. You can see here we do have the Australian rate decision early doors on Tuesday. Again, expect no change across all central banks, actually. Thursday, we then see the Monetary Policy Committee from the Bank of England meeting. Again, unlikely a change in rate. However, we will be able to gauge their stance going forwards in regards to monetary policy. So dovish or hawkish, definitely want to pay attention to that one on Thursday. And rounding up the week here on Friday, have US jobs data with all important non-farm payrolls data. So that's all from us here at LAT. Just a little note, Academy will be shut on Monday as it's bank holiday here in London. The trading floor will be back open Tuesday. Classes will all resume Tuesday in-house and on campus. Last thing, have a lovely weekend, everybody. Stay safe, take care of yourselves, and we'll be back with you next Friday for our next market. Take care all. Bye for now.